Hi all, welcome to TCM Education. This is the last video where we are talking about the previous week, which is the week of June, the last week of June. We had plenty of trading examples, great intraday movers. In this video we are picking only three, but those three have obviously a learning curve into them, and being that trades repeat themselves again and again with various nuances, but the concept stays, at least the concept that we are working with. Let's analyze three stocks. Again, nothing that's under the radar. All of those stocks are way above the radar into the big headlights. That's why they are so successful, because everybody's looking at them. There are intrinsic fundamental strength in or weakness in the stocks, and that's what makes a good intraday trade deliver. So let's start with SMR. That's number 3 on our list, and let's see. Again, we've analyzed it before. I don't know how many of you remember. I myself don't remember what we did 3 or 4 days ago. So what happened with SMR? First of all, why is it under? I mean, it's like in front of us, because the stock gapped up a lot. So it's immediately in the gainers losers list. Now, at one point, it gets into the daily power list, which is our 100% focus, and there are that many stocks in that list. So you can see here on the chart, SMR doing a job, and basically trading higher, hitting a 40, which is a round number. Now, being that in this case I remember, because I talked about SMR because it touched 40. That was live. That is recorded. That was live. It was recorded that it touched 40, pulled back, and then I said you can consider a move over 40. But what happens when you consider the move over 40? You have to consider what is the stop loss. Take a look at the stop loss here. It's $1. Do you want to start the trading day with a $1 risk on a trade? That's questionable. That's questionable. Anybody can make its decision here. Obviously, the stock ran higher like crazy for $2.50. But besides, that's not the trade that I want to concentrate it. I want you to see that it ran higher, came back, and then consolidated above 40. Now, this consolidation above 40, if you pay attention, took place between 10:45 and nearly 11:30. So that's 45 minutes here where the stock trades above 40. Okay, and you have the time to decide, do you want to enter the trade, and if so, where, and if you enter the trade, what is your stop loss? Obviously, the stop loss should be under 40. Okay, so if you enter the trade, let's say at 40-20 or 40-30 or 40-40 or 40-50, anywhere you enter, the stop loss should be under 40, because there is no other stop loss. I mean, you're not going to move your stop loss to the low of the day. That's suicidal, unnecessary. Why would you increase your risk at threefold? And also, it fits our strategy, which is no more than 1% risk per trade. It's a $40 stock. 40 cents is the maximum risk. Now you can enter this trade if you're, well, not smart, if you're more like attuned, okay, at 40-20, and then you risk only 0.5% on this trade. And then we said the target of the trade is the end of the day. Okay, we don't have a price target because we're looking at the most aggressive stocks. They can move up intraday 3%. Some will move 8%. Now, if it moves 8%, that's a huge winner suddenly, where you have to do nothing other than wait for the close. Okay, so it's possible that the stock moves up 3% and then comes back to the entry. There's also all the scenarios are on the table. Obviously, I know that everybody manages the stock differently. Okay, but we cannot analyze the stock with, I don't know, unlimited scenario, because this is what happens with stocks. We have unlimited scenarios when a stock moves higher. It can move up 2%, came down 3%, and then move up, I don't know, 10%. So all the scenarios are on the table. We're dealing with one scenario where the stock gains momentum, enters the trade, is in the money 1%, we move the stop loss to the entry. Therefore, we create a zero risk on the trade. And for those who trade inside of the US, you don't pay commission, so you have nothing to, I mean, just do more trades. I mean, at least you don't pay commissions. Those who trade outside of the US pay commissions. Those add up, but still, the commissions when you trade the US equity markets are the cheapest by any factor. But you know, I'm digressing. Let's not get into that. The idea here is that you take this trade. SMR is under the headlines, and it closes up at 43.40. So the trade starts at 40.40, ends up a $3 winner on a 40-cent risk. That's a lot of profits versus the risk. That's 1 to 8, and it's also an 8% winner. So because it didn't need much to get to 44 to how much was it? 40. To get it to a 10% winner, that's $4, so that would have been 44.40. Yeah. Okay, so another 60 or 80 cents, whatever. Bottom line, the idea here is that you have a trade where you can wait, prepare yourself, you know exactly what is your entry, and if you don't know, you can guess it, you know exactly where is your stop loss, under 40, and then you let the stock, which is one of the best, was on that particular day, one of the best performing stock, and good things happen. In this case, that's what got us to number 3. Let's move to number 2. Okay guys, number 2 is a stock that also under the headlines, nothing behind the scenes, no surprise. The only important stock that delivered earnings last week on a Friday before the market opened was Nike. It was already up big time before. I don't remember, it was 8 or 9%, so it was dominating the gainers losers list. It wasn't on our daily power list, because one of the drawbacks of our daily power list, and I'm not sure yet if it is a drawback, but it doesn't count. We don't count in the range percentage the gap, and most of the price action was on the gap, but we're not gonna dwell into that. And of course, we're not gonna take a gamble on earnings and lose start the trading day with a amazing loser. I mean, if you bet on the short side, of course. So this is the number 2 trade, and again, very simple this time. Why? Because if you observe the price action in the pre-market, and even if you didn't observe, the stock gave an early opportunity to trade the 70 breakout, and it had a clear stop loss, the lows of the day. Now, why I'm pointing to this trade is because the amazing liquidity, the huge gap, the big name, the tight stop loss, and because it's such a round number, 70. So you enter the trade at 70, you can immediately put your stop loss at the lows of the day. Now, let's say the lows of the day is 63, which is unreasonable. Let's say it is. It doesn't make any sense. Let's say the stop loss is $2. Doesn't make any sense. In this case, the risk reward here is fantastic, because you have a 28-cent risk on this trade. Now, what's the worst case scenario that can happen? You're going to enter the trade. There's going to be a little bit of slippage, but not a lot, because this stock is very liquid, and the volume, as you can see, the volume bars were tremendous. Anyway, I know that there is slippage, and there is risk. So, but let's say you attach another 15 cents to the risk, and instead of 28 cents, it's 50 cents. It's still below our threshold of 1% maximum loss per trade, which is in this case 70 cents. And the initial risk and of course, sometimes the trade works. Look at this one, for example. So the worst case scenario is 28 plus some slippage, let's say 50. That's the worst case scenario. The best case scenario is that the stock makes it to 72, 73, whatever. Okay? In this case, the stock made it to 74 and closed the trading day at 72. Obviously, managing this stock is not very easy because it's so volatile. You're up $2 after 5 minutes and you're thinking, wow, the trading day is already full green. I'm up $2, that's 3% on a $70 stock. And eventually it ends up at the same price at the close, but at one point it doubles. So again, I'm not going to dwell into managing this type of trade because you never, it's impossible to hit the highs of the day. But it's possible to set yourself a target, which is, again, if you're $2 in the money, you lock $1. You're $3 on the money, you lock $2. And again, let this mega mover breed. Again, it's possible that by letting it run, the stock gains another 5%. In this case, it gained another 3%. But the idea here was not how you manage. The idea here is the entry. Okay, the uniqueness of this entry being Nike was in the spotlight. Okay, guys, let's move to number 1. And guys, the number 1 trade is the number 1 stock. I mean, it makes sense. Now, I know that we talked about CRCL so many times. We had a trade short, I think at 250 at one point on Monday. Nobody remembers that trade. I don't remember it myself. I can scroll back on the chart and show you that trade, but the idea here is that we are basically educating ourselves and preparing for future trades. Not necessarily in CRCL, but using the same pattern that you're observing here with me. And if we observe this pattern, this is clearly the best pattern that a big mover can offer. Risking very little on a trade that gets into a mega mover. I mean, how many trades you're going to have where a stock moves down $15? In this case, it's 8% or something like that, or 7%. But the idea here is not how much it moved down, the idea how little you had to risk on this trade. And overall, the risk on this trade was 0.5%, meaning $1. Okay? It doesn't ever happen that you can trade this stock with a $1 stop loss. It's, I mean, if we go back a couple of hours, the trade here before 11, the stop loss was $2 and it wasn't enough. I mean, a $2 stop loss would have been, which is the full 1%, would have been a loser. And that happens. Okay, so there are no guarantees. You can exit a trade on 1 cent, on 1 cent. Sometimes it happens actually on a 1 cent slippage. And then you lose a huge winner. It happens. So get used to it. And again, the idea here is that you wait, you see a pattern that's building along a period of half an hour here, a little bit more actually. You can prepare yourself, you know what is the entry, you assume the stop loss, it works, and then you take whatever you can from this trade if you manage it right. And you picture this setup in your brain, and when you see it again, you'll know how to act. Basically, those are the best 3. There were so many additional trades that we analyzed. I hope it was illuminating. Please share this video and like it, and we'll see you guys Monday morning. Thank you.